Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 152, published April 18th, 2025, titled More Top Sustainable Stocks to Consider. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information and resources. Remember that you can find a full transcript and links to content, including stocks, symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please visit the podcast's web page for links to articles and additional company and stock information. Now, the following articles offer some interesting investment ideas. The first article is titled ESG Still Matters, 3 Defensive Stocks That Make the Grade. It's by Teresa Rivas and seen on barron's.com. Here are a few quotes from her article. Portfolio manager Bill Davis is shutting out all the noise and sticking to his guns. The term ESG has been a lightning rod for a long time, but it is, and always has been, simply a proxy for finding a well-managed company. Davis puts his money where his mouth is when it comes to the actively managed Hennessy Stance ESG ETF, which doesn't invest in tobacco, fossil fuel, weapons, and similar areas. He does make exceptions based on company principles. The fund uses an algorithm to rank S&P 500 companies by various risk factors and metrics, and identifies those most likely to generate positive alpha and minimize harm. It also helps avoid being reactionary to the zigzags of U.S. policy these days. That strategy, which also avoids large positions, hasn't distinguished itself in these past few years, when the Magnificent 7 tech stocks and a handful of other mega caps drove index performance. The fund, though, does have positions in Google, Apple, and Netflix. Still, Davis stands firm. The strategy can show its worth when investors are more concerned with downside risk protection. There are plenty of companies, though, that Davis feels differently about. He likes drug distributor Cardinal Health. Peer to Barron's pick McKesson, because healthcare remains a safe haven and Cardinal has done particularly well, doubling the S&P 500 in recent years. Its earnings growth profile is good, and it's a solid company with large enough scale to have pricing power. Also making the cut is Atmos Energy. Davis cites the natural gas utilities' relative momentum. The shares are up nearly 30% in the past year, and its defensive qualities. Although the fund shies away from fossil fuels, distributors like Atmos that are transparent, focused on reducing greenhouse gas emissions, do fit the bill. Davis owns staple General Mills as well, again for its defensive qualities, including a 4% yield and its size, big enough to exert pricing power. He does see only modest upside, but also low downside, so it's a good fit for our portfolio." End quotes. This second article brings us back to the most likely favorite sector for ethical and sustainable investors. Its title is 5 Renewable Energy Stocks to Buy Amid Growing Market Demand by Nalak Das at Zacks and seen on finance.yahoo.com. Here's some of what Mr. Das says about his picks. These 5 renewable stocks have strong long-term potential. These stocks have seen positive earnings estimate revisions in the last 60 days. Each of our picks currently carries a Zacks rank number 2, that's a buy. At the same time, these companies pay dividends regularly at an attractive rate. 1. The AES Corp. AES is one of the forerunners in the utility industry's transition to clean energy by investing in sustainable growth and innovative solutions while delivering superior results. AES continues to invest in clean energy projects. In 2024, AES completed the construction of 3 gigawatts of wind, solar, gas, and energy storage. AES expects to add a total of 3.2 gigawatts of new renewables to its operating portfolio by the end of 2025. AES has an expected revenue and earnings growth rate of 3.1% and minus 1.4% respectively for the current year. AES has a current dividend yield of 6.32%. 2. OGE Energy Corp. has been investing steadily to expand its renewable generation assets. The company is focused on reducing its carbon dioxide emissions to 50 to 52% by 2030. As of December 31st, 2024, OGE owned the 120 megawatts Centennial, 101 megawatts OU Spirit, and 228 megawatts Crossroads wind farms. It also owns and operates 6 solar sites across the state of Oklahoma and 1 in Arkansas, which comes with a cumulative generation capacity of 32.2 megawatts. OGE has an expected revenue and earnings growth rate of 0.8% and 3.7% respectively for the current year. OGE has a current dividend yield of 3.88%. 3. WEC Energy Group, Inc. is investing in cost-effective zero-carbon generation like solar and wind. During 2025 to 2029, WEC plans to invest $28 billion, out of which $9.1 billion will be invested in regulated renewable projects. The idea is to further strengthen WEC's renewable portfolio. WEC Energy Group has an expected revenue and earnings growth rate of 9.2% and 8.5% respectively for the current year. WEC has a current dividend yield of 3.42%. 4. NineSource Inc. expects to invest $19.4 billion during 2025 to 2029 to modernize infrastructure, which will enhance the reliability of its operations. NineSource continues to add clean assets to its portfolio and retire coal-based units. The company is set to retire its 100% coal-generating sources between 2026 and 2028 and replace the production volumes with reliable and cleaner options at lower costs. NineSource aims to reduce greenhouse gas emissions by 90% by 2030 from the 2005 levels. This initiative can help NineSource lower the cost of operations by focusing on new and advanced assets. New products and services can lead to added revenue streams. NineSource has expected revenue and earnings growth rates of 11.1% and 6.9% respectively for the current year. It has a current dividend yield of 2.94%. 5. CMS Energy Corp. remains one of the primary utility providers in Michigan. CMS plans to invest $20 billion in infrastructure upgrades, repair, and clean energy generation during 2025 to 2029. In November 2024, CMS filed its 20-year renewable energy plan, which includes the addition of 9 gigawatts of solar and 4 gigawatts of wind to its generation portfolio between 2025 and 2045. CMS Energy has an expected revenue and earnings growth rate of 7.4% and 7.8% respectively. For the current year, it has a current dividend yield of 3.05%. End quotes. This third article is an updated version of a February 20th, 2025 story. It was featured in my podcast, The Low Carbon Stocks for Sustainable Investors. The new title of the article is Best Natural and Organic Food Stocks to Buy Now in 2025 by Sumit Singh. Again, it's from the Great Zacks Research Group and found on finance.yahoo.com. Here's some quotes from the new article. Companies like Hain Celestial Group, Inc., General Mills, Inc., and Vital Farms, Inc., are responding to the rising demand for organic, clean label, and ethically sourced foods, with consumers prioritizing transparency, sustainability, and minimal processing. The market for natural foods continues to grow. Expanding farm networks, plant-based innovations, and a focus on humane, eco-friendly production are shaping the industry's future. The global healthy foods market is expected to reach $2.26 trillion by 2035. So 3 natural food stocks to watch. 1. United Natural Foods, Inc. stands as a prominent player in the natural food sector, serving as one of the largest distributors of organic and natural products in North America. Through its extensive network, United Natural Foods supplies a vast array of products, including fresh produce, pantry staples, dairy alternatives, and plant-based foods. With its diverse portfolio, the company caters to both retail giants and independent natural food stores. Meeting the growing demand for cleaner, healthier eating options, United Natural Foods has made a strategic shift by realigning its wholesale business into two product-centric divisions, one of which is solely dedicated to natural, organic, specialty, and fresh products. This Zacks rank number 2 by company is increasingly focusing on innovation and sustainability within the natural food space. The company is committed to enhancing its supply chain practices, reducing waste, and supporting regenerative agricultural initiatives. United Natural Foods is also working closely with suppliers to accelerate food innovation. Upgrades in automation and warehouse processes are leading to better order accuracy, less product waste, and faster deliveries. 2. Sprouts Farmers Market Inc. has been at the forefront of the natural and organic food movement, catering to health-conscious consumers seeking fresh, high-quality, and ethically sourced products. The company's commitment to fresh, organic, and attribute-driven products sets it apart. This strategic positioning not only resonates with a growing base of wellness-focused consumers, but also aligns with broader food industry trends favoring transparency, sustainability, and nutritional value. In addition to product innovation, this Zacks ranked number 2 company excelled at enhancing customer engagement through strategic merchandising events and effective marketing campaigns. Seasonal events like the Summer Cherry Festival shine a spotlight on fresh, specialty items and educate consumers on better-for-you choices. This approach not only drove strong traffic across its channels, but also contributed to its robust e-commerce growth, surpassing $1 billion in sales in 2024. 3. Beyond Meat Inc. has strategically realigned its product innovation to strengthen its appeal among health-conscious and natural food-seeking consumers. A standout development in this direction is the launch of Beyond 4 and the extended Beyond Steak line. These new offerings have been designed not only to deliver flavor and texture improvements, but also to meet heightened consumer expectations around nutrition and ingredient transparency. These products have earned accreditations from respected health organizations, including the American Heart Association, American Diabetes Association, and Clean Label Project. This Zacks ranked number 2 company has taken proactive stance using nutritional credentials and transparent messaging to reposition its products as a better-for-you choice. By doubling down on natural and functional food innovation, the brand is not only aiming to win over skeptical customers, but also elevate its products to a new standard that aligns more closely with organic and wellness-oriented trends in the food industry." End quotes. Additional article links. 1. Title: Analog Devices, a top socially responsible dividend stock with 2.2% yield on Nasdaq.com by BNK Invest. 2. Title: How to Invest in IonQ, that's IONQ, on Fool.com by Rachel Warren. 3. Title: 11 Climate Tech Companies to Watch in 2025 on Inc.com by Chloe Aiello. And 1 article from the UK: Triodos Bank recognized as top scoring Best Buy by Ethical Consumer on FF News by Ethical Consumer. These are my top news stories with their stock and fund tips for this podcast. More top sustainable stocks to consider. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on May 2nd. Bye for now, and thank you for putting up with my rather funny voice. Okay, bye. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.